So as I was saying, there's stocks and bonds. Now, if you have, and in my email I sent to everyone, I talked about being balanced. A balanced account or portfolio has stocks and it has bonds. And the theory behind that is when a stock is up, a bond is down. This is historically speaking. When stocks are down, bonds are up. So the idea is if you have a little bit of both, when the market is on a rise, your stocks are doing really well, life is good. When the market is not on a rise, well, you know, your bonds are there and they're paying out. So your stocks may not be doing so badly, but you're not doing as badly as you could be doing because you got your stocks paying their interest. Your bonds are paying some interest. Now, a good example of the difference between having a balanced or an unbalanced fund at this point in time for the town of Ashland is that the two other trusts that are not Scribner, the Memorial Trust and the Blake Fund, the Fireman's Fund. The Fireman's Fund is not balanced at all. It is 100% stocks. There's not a bond in that thing. It's 100% stocks. Good stocks. They're good stocks. It's all 100%. It's down 22%. The Memorial Park Fund, on the other hand, has stocks and bonds. It's about a 60-40, 60% stocks, 40% bonds. It's down 12%. Now, if you have only stocks, when the stocks are up, man, you are making money. And the Blake Fund has made money. But you know what? If you're not balanced, the stocks are down, you're losing. And the Blake Fund has lost quite a bit of money because of that. It was at over 100,000. No. Wait. It was 72. No, it took a hard hit. It was like 80 something and it's down to 50. The Memorial Park Fund, on the other hand, when you're balanced, well, bonds don't earn as much as stocks. So, you know, you don't have all your eggs in the stock basket. You're not making as much when the market is up, but you're not losing as much money when the market is down. Now, what you're looking at in Scribner is an unbalanced fund. This is all mutual funds. Mutual funds are all stocks. They're good stocks that are owned here. They have very high expense ratios. And expense ratios are the fees that you are charged to be a part of a fund. You're charged a percentage every year. The expense ratios are not shown here on the statement. I found all the expense ratios by looking up all these mutual funds on the internet. And expense ratios are extremely easy to find when you look up stock and mutual funds on the internet. They're like right there at the top, expense ratio. The expense ratios on these range between about 0.85% and some are almost 2%. That's really, really high. So that means if you have $100,000, for example, and you've got an expense ratio of 1%, then you're going to pay $1,000 a year just in fees. I have problems with that. I think that it's not invested as well as it could be. These expense ratios are also over and above advisory fees that Wells Fargo is charging. The bottom line of Wells Fargo and the fees is that because of the fees involved with Wells Fargo, which includes expense ratios and advisory fees, we're only getting a 2.5% income off this fund yearly. And that's not my number. That's a Wells Fargo number off the bottom of their statement. With 8% has been taken from this fund every year. And that is not my number. That is a Wells Fargo number from the bottom of their statement. So it's not earning very much, 2.5%. You really want to try to earn between 3 and 4% at least. And it's being spent at a rate of 8% per year. So this is not anything more than about 8th grade math, maybe far less, that can tell you that this thing is draining dry. What I also want to point out is what's called a UIT down here. Now a UIT, yes, I want to continue the session. A UIT is called a Unit Investment Trust, which is just a fancy financial term for meaning this is a company that has a bunch of different kinds of stuff in it that you can invest in. Now, the reason it's not called a mutual fund is because the kind of stuff you find in a UIT aren't very good stocks. Stocks are rated like baseball is. Oh, how I miss baseball. It's rated like baseball. So AAA, that's the best. And then AA, you know, it's pretty good. Then it goes to triple B, double B, B. Then it goes to double C, C, and D. So the best kind of stocks you can own are AAA, triple B, AAA rated stocks. And a AAA rated stock would be something like IBM, Exxon Mobil, you know, the big guys, Bank of America, the really big, solid firms. Then when you start going down, Wells Fargo, you may have heard that in the news somewhat fairly recently. They have been downgraded, and then they've been upgraded, and they've been downgraded, and they're bouncing back and forth somewhere between AA and AAA, which is still a very good stock. Then you get down into things that are kind of in the B range. And then you're starting to talk about stuff like maybe health insurance, like Blue Cross Blue Shield. Now that's a big company. Blue Cross Blue Shield, health insurance is a big company. But how many health insurance companies have you heard of that have gone out of business in the past couple of years? A lot. So you're getting into stuff that may be somewhat, I don't want to say sketchy, but I want to say not as dependable or reliable as bigger companies. And this goes all the way down to something that can have a D grade. And by a D grade, that's almost somebody that's selling stuff out of their garage, but is publicly traded. Now, I looked up this fund. This is called Sabrient Baker's. Sabrient Baker's Dozen is its full name. And I looked at it, and this was a year ago, and I said, what the heck is this? I didn't know what a UIT was. I didn't know what it was. So I Googled it. They're junk bonds. Junk bonds is another name for a high yield investment or a bond or a stock, they're very similar, that is rated below AA. Some people think that call AA or even single A in the junk category. Definitely by the time you get into B grades and C grades, you're talking junk. I looked up what is in this. The kind of stuff that's in the Sabrient Baker's Dozen, there's Anthem Blue Shield is in it. That's a health insurance company. There's a couple of casinos that are in it. Uber would be a junk bond, for example. The Uber company that, you know, you can get rides in big cities. Junk bonds, there's nothing really bad about a junk bond. And I want to make it very clear that this is not illegal to hold a junk bond. Junk bonds can make a lot of money because these are very, very small companies that want you to invest in them so that they can get started. But really young companies that are starting out often don't make it. So you can lose money in junk bonds very, very quickly as well. Now, approximately 14% of the Scribner Trust is invested in junk bonds, which is not illegal. The way the Scribner Trust is invested is as though someone were, let's say, a 40-year-old who is working for IBM and has $100,000 to put away for retirement and was willing to watch this money in the stock market for about 20 or 30 years, 20 years. They can handle, a person in that situation waiting on this stuff to mature, could handle ups and downs of the market, which over time will be up, but they're not touching the money. And they can sit and watch it invest and grow over time. And having a 14 or 15% of your money in junk bonds makes perfect sense. However, the Scribner Trust is not something that we're leaving alone for 20 years and watch and see what happens. It's something that's having to support the Scribner building on a daily basis. It really needs to be invested more like someone who would invest their money who is, say, you know, is like 70 years old and is needing this money to pay the bills every month. They need it in something that is more stable, and they need it in something that isn't costing them a lot of money to keep going. That's my opinion. Does everyone understand, have any questions? Do you understand how this is invested right now?
I think so.
Yeah. I mean, all these mutual funds, what you're looking at when you see all of the stuff up here is you're looking at BlackRock, BIICX, that's its ticker number, like symbol, you know, like sometimes if you watch Financial Channel or something, you'll see the ticker going across like all the different stocks. It has a cost of $10.44 a share. We own 733.303 shares of this. Scribner does. The last price, it was at $10.09. So we bought it at $10.44. Now it is worth less. It has a market value of $7,399.03. They don't have this filled in on its change, but it has a loss now. We've lost $259.97 just on this stock because we bought so many shares of it at $10.44. It only went down, you know, like 35 cents a share, but we had so many, 35 cents times 733.303, that has left a loss of $259.97, or down, it's down 3.3%, just this stock. However, over time on this, and we've had it for quite a while, we have had a gain of 28.02% because the market is down, but there was a time when the market was up and it was doing very well. What else am I seeing? If it's supposed to, as an estimated annual income, if we just sit and watch it, it should make about $375 a year, just this stock. And this is its Morningstar rating. Morningstar is a place that rates stocks, you know, is this really good, pretty good, not so good, and it's got a 4-star rating. And it's, I mean, I want to make it very clear, this isn't in bad stuff. And the market is down. You can't make a silk purse out of a sow's ear. You know, no matter what your money is in right now, let me tell you, it's going to be down. It's just how much will it be down? And as I pointed out with the Blake versus the Memorial Park, well, it depends on what your eggs look like in your basket. You know, it could be down a lot or it could be down just some.
So I had a couple of questions, Amanda.
Sure.
Looking at this particular one you were just using in the example,
Sure.
and the 28.02%, it says it's $1,619.22. Is that over the life of the investment?
As we have had it since Scribner had it, and I don't know when Scribner bought this in. I can tell you that I got an email today from Matt Lassard, who is the Wells Fargo account manager for this fund, and it was sent to the trustees of the trust fund, which is no longer a quorum, so I couldn't act on it. Wanting our permission to sell some stuff and to buy some other stuff. So this stuff is actively traded, and that is something that you want to have happen. You want to keep things actively traded, because if you stay in a stock for too long, then you get stuck by its cost basis, and you get and that can be a real problem. So if you buy low, buying low is awesome. Buy low, sell high. But if you buy low and then 5 years later decide to sell it because it's really high, that disparity of your cost basis and what it is now can hit you. Now, I don't know what the tax situation is. I just don't know, because this is not a personal account. This is a town account. So I don't know what the municipal situation is for that. But I do know that you want to try to keep things, you know, you want the low high, but you want to be careful of that gap, because that capital gain can get you really bad.
Okay.
But I don't know what happens with a municipal account.
The other question I had was, when I am looking at these, and I did look at the Vanguard stuff earlier.
Yes.
How do you tell the difference between, I kind of got lost on telling the difference between the AAAs and the AAs and all of that stuff. I
know that by looking them up online.
Okay. All right. So that's not something that's not just something that's obvious within the spreadsheet.
It's not. And when I looked at this stuff, honestly, I'll tell you the truth. When I looked at this stuff a year ago, when I first got access to this stuff, which wasn't quite a year ago, and I looked on this account, and I was familiar with many of this stuff. Loomis Sales was familiar to me. I said, okay, that's good. Lord Abbott was familiar to me. Nationwide was familiar to me. Blackrock was. And it's when I hit this Savory at Baker's Dozen, I was like, what the heck is that? And that's when I started looking it up and realized, oh my gosh, it's a junk bond, which I just didn't think was appropriate for the Scribner Trust to be in. Not illegal, nothing wrong with it, just too volatile, in my opinion.
Okay, I remember you talking about that.
Yeah, and so all the rest of this stuff has very high ratings. They're all AAA, AA. There's no problem with this stuff at all. And the same is true with Vanguard. Vanguard is all going to be everything that you're looking at is going to be AAA or AA, unless it specifically says high yield, and there's nothing high yield that I would look at Vanguard. It exists. It's not illegal. But I don't think that we need to be invested in it, so I didn't make that anything on an attachment. But unless it says high yield, you can assume that they're all going to be AAA and AA.
Good.
Okay, so this is how the Scribner Fund exists today. It's getting close to 90,000. I don't know where it will be next week. It bounces around a little bit more than it would if it had bonds in it. It has, we know that when we hit 40,500, that's the principal beyond which we cannot spend. So we're really looking at more of a value of having about 50,000 in it, or 49.5, because we cannot spend below 40,500. So that is how the portfolio stands. Now, I'd like to see, can you see this now, the Vanguard? Do you see that? On the screen share? Huh? It should say balanced funds.
Yes,
Target
that's the Vanguard. Yeah.
This is the Vanguard, and this is from the Vanguard website. So the first thing, when it says balanced, like I said, it's going to be stocks and bonds. That's the balancing. And I started to say before I remember that, oh my gosh, I wasn't recording it. You've probably heard of school bonds. You know, often, I think Plymouth Regional had a school bond not too long ago. I used to live in Holderness, and we had a bond that we voted in to pay for building a school. And when you do that, for example, you are selling, you know, people, you're putting it out there on the market for people to buy shares of your bond. And all bonds are rated just like stocks are rated. And I'm not saying that we should go be buying school bonds for schools in South Dakota. That is not what I'm saying. I'm just giving you an example of one example of a kind of a bond. And so when you sell a bond as a school, for example, you have to go, of course, through a broker. It's not something you just do yourself. And you're putting it out there as a publicly traded commodity for people to buy, invest in this bond, you know, and these people who buy the bond say that buy it knowing that in 5 years it will be paid back, or in 10 years it will be paid back, or something like that. And so the school knows that it's borrowing money. It's getting people to buy these bonds, giving them money, knowing they're going to have to pay them back, you know, in so many years. So that's one example of a bond. Sometimes utilities can be a bond where you're investing in big electric companies, not bigger than Ashland Electric, smaller than GE, but those can be bonds as well, and they're also rated like a stock is, you know, to be solid, maybe not so solid, like stay away from that kind of stuff. So what you're looking at here in all of these funds are funds that they says here at balanced, which means it's got a share like 60-40, 70-30, something like that, stocks, bonds. Now, the first group that you're looking at are target date retirement funds. These are all going to be very balanced, going to be pretty conservative. I wouldn't begin to look into this. This is for a longer term. It could be for 10 years, 15 years, 25 years, 30 years. It's how they're what they put in them for growth. We just have a lot of other things to look at. I don't think it necessarily has to be on the table. Life growth strategy, again, this is for a long held, you know, something that would be growing longer. Like if you're 30 years old and you know that you need to start saving for retirement, so it'd be a good place to go. Note it says things like moderate growth. Note that they say things like their year to date, their yields are 6.25%, 4.14, 4.75. So they're a little higher with the 6, but they tend to be in the 3 to 4 to 5% amount, which is a really good solid rule of thumb. If you head for that 3 to 4%, you know that you're not going to make a ton of money, but you're not going to lose a ton of money. And annuities, you may have heard of an annuity. An annuity is where you Walter's probably just squirming and is hearing my definitions of stuff. But an annuity is where you hand.
Do you still have me muted?
No, I don't have you muted. See, I've been so brave, I don't have you muted. How am I doing, Walter? Is it making sense? Am I pretty close to the
I'm letting you run with it. I'm letting you run with it.
Okay. An annuity is basically where you kind of hand over to another company, another investment company, all your stocks and bonds, and they in turn pay out an exact, steady, solid amount that you agree to every year, which is usually between 3 and 4%. A good example of this is the Rhode Island, oh gosh, I'll get all the title of it. It's the Rhode Island, Charitable Investment Portfolio Corporation. That's not the title, but it's darn close. And I'm on a board, CANE, Classical Association New England. It's a New England based Latin Teacher Association, which sounds very small, but we actually have about a 25,000 membership, nationwide. It's really big. And we have invested a sizable amount of money with the Rhode Island Charitable whatever corporation, and they pay it out to us as an annuity, which means that we have taken our hands off it. We let Rhode Island Charitable Trust have it, and they have guaranteed us that they will pay us 3.5% from that fund forever. Now, what happens is that some people can do it. You can do it as an individual and have an annuity, and you basically hand over all of your assets to the annuity company, and that company, that investment firm guarantees that until you die, they will pay out 3% or 3.5%. It's very rarely any more than 4%. And what's in it for them is that, well, when you die, they get it. So there's a kind of a balance there. And by paying out only 3 to 4% a year, I think you can pass an annuity on in your will. I'm not quite sure about that. Can you pass an annuity on, Walter?
It depends on how your agreement's written.
Okay, so there you go. But the reason that an annuity only pays 3 to 4% a year as a general rule is because that preserves the corpus of the investment. That's why that's such a magic number. Now, as I said with Wells Fargo, what is happening right now is that it's only making 2.5% because of the fee. And there's been a draw on it of 8% for at least 20 years I can document. It hasn't been at Wells Fargo for 20 years, but this rate of spending has been going on for 20 years. So there's that disparity, of course, underinvested, overspent, depleted. So as I look at these things, what I'm seeing here for the average annual returns of being between 3 and 4%, that looks very solid. It's balanced, it's going to be conservative, but you're not going to make a ton of money. Now, some years you will make more than that. Right now, you're not getting that. The market's down, you're negative. Other years you could be up 8%, 10%, 12%. It's an average. So, and because this is not an annuity, we own them, we still have it, we will get the full 12% if the market is really up like that. We will also suffer the full negative 12% when the market is down. But looking at that 3 to 4, that's a good average. That's how it's invested. It's invested to average that over a long term, which means that it is invested in AAA, AA stocks. It's got good bonds to offset stock losses, and that it should do that over time. Now, looking at these, the traditional ones were the ones, in my opinion, that I think would be best suited for Scribner. We do not need to make a decision tonight. The one that I can tell you a little bit about these, my personal pick is the Balanced Index Admiral Shares. It has an expense ratio, as you can see right here, of 0.07%. Where we are at Wells Fargo now has an expense ratio that averages 1%. So the difference would be on $100,000 of having $1,000 a year in fees or having $70 a year in fees. That's the difference. That's what that expense ratio means. That's our cost to be a part of this. The price of this is $37.53 a share. Okay, it was up today, 0.38. Not bad. 38 cents. It was up today. On a day the market was down $100 points. It has a I don't know all of this. Walter can help me. 2.03% B 30-day. Is it for over a 30-day period? It was 2.03% up. What's the B?
The B, that might be a footnote at the bottom, but that's
No, I
your price
looked.
performance.
Yeah.
Oh, okay.
I looked. I didn't find anything. Year to date, though, it is down 3.55%. Everything is down year to date because year to date we're down. You can't get a silk purse out of a sow's ear, but you can try to balance it so it's not down as bad as it could be. But then, however, its projected average annual returns are quite good because the whole idea of being invested in the stock market is that it is over time. This isn't a savings account where you can watch the savings compound, you know, month by month or year by year, but you're going to have to really commit to some time in the stock market, usually at least 5 to 10 years.
Amanda?
Yes.
Is the 30-day B, is that just 2.03? Is there a percent after that?
There's a percent after it. Okay,
because the other thing that's used in B is beta, and that's a measure of volatility compared to the market, but that's not what's being expressed there.
Oh, okay.
Thank you.
Okay. Now, I like the balanced myself. I like the Balanced Admiral Fund because it has a nice low expense ratio. It's not going to cost a lot to be in there. These are all, they are mutual funds. The Admiral Shares is a mutual fund, which means it's a big collection of stocks and bonds. And it's balanced. It's a collection of stocks and bonds. Now, the Star one is also very good. It has a higher expense ratio. It tends to put out a bit more over time. However, no, not however. However, the Star is just like a Star has a lot of points. What the Star Fund is at Vanguard is it's a little piece of all the different Vanguard mutual funds that they have. So each mutual fund is a big basket of multicolored eggs. And this Star Fund is taking a handful of multicolored eggs from all these different baskets so that you have a basket of just super funky multicolored eggs. Do you understand what I mean? Like there's just, it's probably the most possibly diverse fund that they have. It's going to be extremely diverse. Everything here is diverse. It has all kinds of different stocks from big companies and kind of big companies. They're called mid cap and large cap. They have all kinds of different bonds, but the Star is going to be the most diversified. And then I think those are the two that I really know the most about. The others are very similar. And in looking at things like expense ratios, they're higher. Usually a higher expense ratio can mean that you make more money on it, but not always. And we also need to think about how long we would be invested in this and how much money we would want to put into it. Boy, there's a lot of information coming out tonight. I feel.
Yes, there is.
I mean, like a steamroller here. We don't need to make any big decisions.
One of the things that I noticed, Amanda, that when you click on the actual things, it actually brings you to another screen that gives you a little bit more information. That is, the overview. And
here's the Star Fund.
It's very interesting looking at that information and seeing those graphs and charts and how it's done over the last like 10 years and everything.
Yes.
So that's very useful and interesting information when we're looking at these, where we're going to put the money. And
absolutely.
I would assume that we would be probably looking at going with something in the, like the things that you've talked about here, but maybe some things that are a little more high risk and maybe some that are a little less risk, and then the things in the middle range. And that's one of the things that I was seeing when you actually clicked on that was it actually gave you a thing 1 through 5 as to how what kind of risk it was.
Exactly.
So I thought that was very helpful information on there.
Yeah. So they're all risk potential for all of these balanced funds is going to be about a 3 because you are balanced. More risk would be having it all in stocks,
Right.
for example. Less risk would be having it all in like a CD or something, a certificate of deposit. You're not going to earn a lot, but you won't lose anything, and stuff like that. Fees and minimums are also an important. I'm just clicking on some different tabs up there. As you see, many of these have an initial investment of about $3,000. We can manage that with Scribner. We can manage that. Here's your expense ratios is 0.07%. On an average, a similar fund would be closer to 1%, so it's a good savings. And the reason Vanguard has such low expense ratios is because Vanguard is a mutual company, which means it's not owned by another larger company over it, like Wells Fargo's got banks and it's got investment advisories and all this kind of stuff. So Wells Fargo is out to make money with this. Vanguard is just Vanguard. It's not owned by anything else, and they're not having to make as much money, off their clients as other larger, multi-tiered kind of investment firms are. That with Vanguard, it's very easy to transfer things over. It can be done basically online. I called and talked to a Vanguard representative earlier last week, and it's very easy to transfer everything over. It can take 7 to 10 calendar days to transfer things to Vanguard. They're going to transfer everything in kind, which means that we don't need to go to Wells Fargo and sell off everything we have there. Vanguard will take what they get. They'll take the junk bond fund. They'll take the BlackRock and all the mutual funds. And then Vanguard will work within Vanguard and sell it off from there, which saves a great deal of loss and taxes. I don't know how the taxes really work with this being a municipal account, but at any rate, it's a cost saving measure that they take it in kind as we hold, and not us having to sell things and then hand them cash. Now, one thing I did look into with Vanguard that I was interested in was just a money market account. A money market account where everything is just held and stable. Money market accounts right now are yielding pretty close to zero. They've dropped the interest rate. And so sticking something in a money market account is just about one step above throwing it in your mattress. But it's not going to lose anything. It's there. It's stable, and you know how much money you got. Now right now we have 89,000 in Scribner. I don't know what we will have in another, week or another few weeks, or when we make a decision to do anything, with how it's invested. But when we move things, if we decide to move it out of Wells Fargo, keep in mind that we don't have to put all of it invested in any of these accounts. The accounts tend to have a minimum investment of about $3,000, some as high as $5,000, but we can certainly swing that. We're going to meet the minimum investment. And I think something we might want to think about doing is keeping somewhere around $10,000 to $12,000 in a money market account. And I say that amount of money because that would give us about 2 to 3 years, 2 years definitely, of money to pay the bills. We wouldn't have to liquidate anything that is invested, and we would know that we have cash on hand for about 2 years of expenses.
So is that how they do that before, Amanda? Is because there was no money market account, they just have a regular checking account, and then they took money out of the investment and put it in the checking?
Yeah, that checking account, I believe, is just a simple checking account. Like I said, I don't have any signatory authority on it. I plan to
Okay.
go to the Scribner building tomorrow. I have keys and go in and grab the notebooks. Since I'm the only trustee left, I'm just going to take them and bring them home so I can look at it more closely and have the stuff on hand as I talk to the different investment agencies on what I'll have the numbers there and what they need from me so I can get signatory authority. But my understanding is that it is just a checking, and historically the Scribner trustees would tell Matt Lassard, the Wells Fargo contact, that they want $5,000 raised. It always seemed to be 5,000. They always wanted 5,000, and then he would sell whatever he thought should be sold at that time based upon his knowledge of the market and what was the best to sell. And he would sell those securities in the amount of $5,000, and that would be put into the checking account. And then that money would last, you know, somewhere between 4 to 6 months. Scribners have been spending around $9,000 to $10,000 a year.
Okay. Thank you.
So I'm sorry?
I said, okay, thank you. That's,
Okay.
yep, that's what I was interested in.
Yeah, if and when we do move any funds, I recommend not moving all of them into investments and holding 2 years expenses in a money market fund, because we would know that we have that money then and there, and it's not going down. Now the flip side is it's not going up, but it's not going down. I don't know what the economy is going to do a year from now. I have gut feelings, and they're not very good, but I don't know. I don't have a magic ball. But that's just my opinion. And it's nothing but opinion because I don't know. I did look into Wells Fargo and asked Wells Fargo about a money market account, because that would be the easiest thing to do, would be just to switch things over. You know, we got stuff at Wells Fargo, we'll throw it in a money market account. Wells Fargo continues to charge advisory fees on the money market account for 3 months. And if the money still is in the money market account after 3 months, there's no more advisory fees on it. So the fees for keeping even money in a money market account at Wells Fargo are pretty high. I asked about what it would be at Vanguard for a money market account, and they said the best that they could do for us is called a federal money market account. It has a yield of 0.39%, but not right now because things are low. You know, they've been cutting interest rates and whatnot with the economy going down south. It does have a fee of 0.11%, but their yield year to date is, I believe, net of that fee, which is to say that that's the fees taken out when you see that amount. We'd probably be earning not a lot, somewhere around 1%, 1.5% on it in a money market at Vanguard, but we wouldn't be charged. That would include any fee that they took out, so we'd still be ahead.
Okay.
But I think that that's something that we need to think about on the funds. Like I said, is, you know, keeping some cash on hand at this time so that we know that we've got this money in the bank, that we can pay the bills, we can heat the building, you know, et cetera, as we begin to work with the Board of Selectmen on what we're going to do next. So if no one has any more questions or thoughts, I'd like to kind of move to the next piece of our agenda. We went through the portfolio and a possible alternative. Vanguard is not the only alternative, and I don't want this to become the dictatorship of Amanda Loud. This is only one idea. Vanguard is great because it has low expense ratios. It doesn't mean it's the only thing around. It's the only thing I know about around. So I'm just presenting this mostly so that you have an idea of that there's options and what the expenses are that one incurs in investing, so that we can minimize those as much as possible.
Well, I certainly appreciate the education that you're giving us and the insight and the you know, just moving forward with this and getting this going and helping us all through this.
Well, thank you. I'm not a investment guru. As I say, I usually know just enough to be a little dangerous. But I'm certainly willing to you know, try to get answers to what we can. One thing I did send you all, and let me see if I can get this. Do you see this on the screen share or not? A table?
No, you're still in Vanguard.
Okay, okay, hold on just a second. I can change that. Stop the share. Okay, share the screen. Here we go. Look at this. This is something I sent everybody. This is actually something I went over with the Scribners in June of 2019, when I was trying to explain to them, you know, this is underinvested and overspent. And so don't let the numbers throw you, you know, it's going to be okay. The best year I went and sat at the library for about an hour, a little longer than that, 2 or 3 hours one day, and pulled town reports and just started to connect the dots on how everything was worth. And I picked 2011 to start with, simply because the numbers before then get a bit erroneous. There was the same town report was submitted 2 years in a row, and there's one year that the numbers don't even add up right. So, but anyway, so I just picked a year. We'll start at 2011. And the Scribner fund had a balance of 149,000, and it ended at 134, which meant it was down 14,725 for the year, or it was down 10.12%. Then I looked at the town reports. What did Scribner spend? Well, they spent 9,239.71, or they spent 6.2%. And then I did the math that said if nothing was ever spent, well, they didn't spend the $9,000. How much would it be worth? Well, they didn't spend the $9,000. The thing would be down to 143,000, or 3.68%. But instead, they spent this money, and the thing was down 10.12%. Then I went and looked up Vanguard. Well, how did the Vanguard fund? I think I looked at the Admiral Fund. How did Vanguard do that year? Well, it gained, it was up, black is good. It gained 0.77%. So you can see that Vanguard is doing better than Wells Fargo would have done. Wells Fargo would have been down 3.68%, even if they hadn't spent any money, just because of the way it was invested and because of its fees. So that's what these columns mean going down. And the last year I did was 2018, where the trust started out at 117,000. It ended at 96.8. So it was down 17.4%. I just about croaked on that. They spent 8,800. And if they hadn't spent any money at all, it would have been down almost 10%, because 18 had a really bad ending to it in December. But if it had been in Vanguard, it would have been down half that much. It still would have been down, but it would have been down half that much, only 5.3%. So looking at these numbers, Vanguard outperformed Wells Fargo, which was my reasoning of going with Vanguard. It has a history of outperforming. Look, Wells Fargo's up here in 2014, up 1.77%. Yeah, Vanguard was up 7.35% in the Admiral Fund. And this was the Admiral Fund that I was interested in. It has that 0.07% expense ratio, very low fee. There was one year that Wells Fargo beat Vanguard. Where was it?
16.
16.
Yeah.
Wells Fargo was up almost 8%, 7.93, and Vanguard was only up 6.55. Now that is due to the kinds of funds that Wells Fargo's invested in, which is also why Wells Fargo was below Vanguard. It's the kinds of funds it's invested in. Wells Fargo is very, very heavy in stocks. Vanguard's going to be more balanced. It's just not going to have as many stocks to be in the market to go up. It's going to have some bonds. Bonds don't earn as much. They don't lose as much. They're up when stocks are down. They help balance things so that you're not going wee, wee. And, Wells Fargo is just, woo. And boy, you hit it on an up year, it's going to be better. One time. So that was my reasoning. I just wanted to share that with you. I sent that as an email on an attachment. Just wanted to explain those numbers and just to help you understand what my reasoning was going with Vanguard. Now, let's talk about the spending, the Scribner spending, and I'll get this shared with you. These are numbers. I'm sorry?
I said, great.
Okay. These are numbers that I came up with by looking at the town report. You see it?
Yep.
Okay. By looking through town reports and by going through the checkbook. I just opened up the checkbook and started looking at what Tom had spent checks on. I did not have anything for 2019, a final 2019, because that was at the account, what is it called when you're being
Audited?
audited. Thank you. It was at the audit. This is not wine. This is tea. I don't drink, but I like my big glass. So people's eyes always go.
We don't care. You're not driving. You're in your own house.
Sometimes I tell you, when I'm doing this, I think I need a drink, but this is
What's
just
in my cup?
There you go. Cheers. So this is the spending that I found from the checkbook. The 2019 was at the auditors. I don't know if it's back yet or not. And this is what I was able to figure out how things are being spent. Now, as I said, historically speaking, the Scribners have spent about $9,000 or $10,000 a year. What are they spending it on? Well, they're spending it on oil to heat the building. Now, the oil is not pre-bought. They use Pemmy River. They buy when it's needed. That may be good. I don't know. I'll tell you one thing. I think heating oil is going to be down this year. Which is
I've been watching it every week.
Yeah.
Want to fill my barrel.
I'm
Yes.
telling you.
I bought all the college's oil in March when it tanked.
Yeah. You know, on the one hand, I'll tell you about the price of oil. On the one hand, it's really great because it's cheap to go to the gas station. It's cheap to heat our homes. I'm taking advantage of that. On the other hand, from a global market perspective, when the price of oil begins to tank, you're hitting an end times phenomenon. It is not good at all. And that is because the oil industry is connected to so much more than just sticking gas in your gas tank. It is connected to technology. It is connected to plastics. It is connected to transportation, airlines. I mean, just stuff that is so far beyond, you know, my Subaru. That when the oil starts to get into the territory that it has been in lately, it makes my skin crawl. So having said that, I have a very pessimistic view of the stock market in the coming months and a couple of years, but that's an opinion. Nobody has a glass ball. This is my opinion. So we're going to have to heat the building. We have spent so far $1,350 on heating oil that I can find. We tend to spend 2019, I think they filled it again at the end of 18, which carried into 19. So I would say that the average amount on fuel is somewhere probably around 2,200. You know, we've spent a little over half of that maybe in 2020. I know that when the library closed down, I went into the Scribner building and I did turn the thermostat down to 50. And I'm hoping that that has saved some on the heat. You know, it wasn't being used. I didn't see a reason to heat it.
Right. It was on a timer system.
It
Yes.
was. So
it was set to come on at a certain time and go off at a certain time.
yeah, and I set it to always just be at 50.
Yep.
I overrode all of that. Now we have.
Can I make a comment here?
Yes.
Yeah, speaking of the heat, as you say that they not on any contract, they're not on any prepay. There's also a lot of municipalities, or even within the municipal other buildings, that there is a deal that if all the buildings in the same town were on the same contract, it would be less than each individual building deciding to do their own thing.
Yeah, I don't.
Right.
Does Ashland have that? Do you know if Ashland has that?
They do have it for some, I believe.
Okay, so let me check. I will check with Charlie. I'm writing a note to myself. I'll check with Charlie about oil buy.
I think it's for
Yeah.
propane.
Hmm?
I think it might be propane.
Okay.
Oh,
They use
And-
propane at the town office and at the Booster Club.
oh,
Okay.
okay.
Yeah.
Yeah, the
But
fire
that
department
same,
uses
but that
Irving
same
for their number
company, I
2.
believe, I'm sorry.
So the fire department uses Irving, you said, Walter?
They're using Irving, so I don't think that we have any sort of an agreement with fuel. But that being said, if we're using propane in number 2, there's no reason why we couldn't use someone like Dead River for everything.
Right.
You know, it gets
Right.
a little bit weird with the propane tanks because of who owns them. But, you know, if this is something the town was serious about, and I know I don't want to go too far down this rabbit hole, and I know I have a select board member who's listening, but there are ways to negotiate a bid and put this out and get suppliers to come in and bid competitively for the town and to do it well. And you can even get to a point, if you're buying enough in volume, they will offer that same discounted price to any town employee who wants to sign up as well.
Oh, okay.
So
that
there are ways that we could save the town a lot of money by getting everything from the same supplier.
Okay.
Yeah,
I
there's
think that's
also the
something to bring up.
school, the highway department and the school, and
Town
We have
office,
mentioned-
and you've got Booster Club, you know,
Yeah.
fire
Utility
station,
office, yeah.
Yes.
Yeah, there's a
Yeah.
lot of buildings around it.
electric department. Yeah.
Well, I know that I have asked to be on the BOS agenda for Monday the 18th for various reasons, and that I can put the bug in their bonnets then and try to see if we can't start something moving forward on that. Now, we have
Amanda?
yes.
Oh, I just wondered, David emailed us today
Yes.
saying that we got our $10,000 bill from the Scribners today. So I didn't know if you knew that went out.
Yes.
Yeah.
I do. We can stop this discussion right now and take care of that.
Oh, that's fine. No.
No, I think because I'll forget. I did sign it originally back in, I believe it's October. Tom Peters, this is all, of course, a recorded meeting that you can see on YouTube. Tom Peters wanted to, had the idea of charging the library a user's fee of $10,000 per year in light of the depletion of the Scribner Trust. And I said, but the library doesn't earn an income. So what you're really doing is charging the taxpayers of Ashland $10,000 a year because that's where the library gets its money. And at any rate, that was kind of, I guess, pushed aside. And the long and short of it is that we did submit a letter to the library to charge a $10,000 user's fee. And I asked it to be noted in the minutes that I, said, sign with reservation, and that I didn't think we could do it because we don't own the building. But it did make it public. So that was my ulterior motive was, well, at least it's coming out into the light. So at any rate, I noticed that Tom, this was done without my knowledge. It was not done with my knowledge that there was a second letter sent May 7th to once again remind the library that the first payment is due of $5,000 in June and the second payment is due in December. So I would like to make a motion at this time that we Scribners rescind the letter charging the library a user's fee, and that we vote never to revisit the subject again. That is my motion. Is there a second?
well, do you mean never to revisit even entertaining
This charge a
user's
user's fee to the library. We do not own the building. Scribners do not own the building. Town of
And
Ashland.
that was also reflected in that letter from the Attorney General's office in December of 2019. Somebody did send in an inquiry to that.
Yes.
Yeah.
And it wasn't clear, and it shouldn't, that the Scribners have any authority as the management company of the property they don't own to
Right.
go ahead and charge a town entity for some kind of fee to use a town property.
Right.
So
Wording, Susan.
I'll make that motion.
Okay. So the motion is that we have no authority to charge. I'm sorry, Susan, I don't understand your motion.
Well, I'll just make the motion that you put forth. I will.
Okay.
You're seconding the
Second
I'll
motion?
second it. I'll second
Second
it.
the motion. So, all in favor of rescinding the user's fee to the library and not to consider a user's fee again, say aye.
Aye. Lisa? Aye.
Aye.
Aye,
Susan
Amanda.
Platt. Yes.
Therefore, it's a unanimous decision of the quorum and it has passed. Very good. So back to our spending, which I think we need to cut because we don't make that much money and it's depleting. We're going to spend probably about $2,200 on heating oil. We have a fire alarm in the building that is paid semi-annually, so it's gone up in price. It'll be somewhere around $438 or $440 this year. $202 has been paid. We have a landline at the library, which is paid monthly, and that is needed because of the alarm
The
system.
alarm. Yeah, you have to
Yeah.
have a thing for that.
Right.
I would like to discuss the lawn maintenance.
Okay. Yes.
So
That-
I'm gonna get this white elephant right out into the open here. Ray Mason, Mason Enterprise, is my significant other of 33 years.
Okay.
And I've had conversations with him about this. We've discussed this. He is very willing to give up this account
Mhm.
if the town of Ashland takes over doing it for, like they do the rest of the parks and buildings in town.
Well, I think that's something then I can bring up before the BOS.
You know, it's not a money-making account for him.
Okay.
He kind of does it, you know, he's not charging his full rate to do it. It's kind of done as a community service. He doesn't mind doing it. But several years ago, the town highway crew took over the shoveling of the walks. Now, when there's a snowstorm or such as that, Mason Enterprise usually sends his crew up if it's a day that the library is going to be open. And we know full well that the highway crew is out plowing and sanding and taking care of our roads and sidewalks, that they're really not able to go up and shovel all the stuff at the library that needs to be shoveled. And there's a substantial amount of that. So when that happens, you know, Ray will send his crew up and say, you guys go shovel the library. And, you know, he doesn't charge for that. And that's fine. And he likes doing it. He wants it kept safe for the people. He also likes it looking nice in the center of town. Like I said, with the lawn maintenance part of it, I know he's done a little bit of cleanup this year from the winter mess or whatever you want to call it. And, you know, some spring cleanup that would be reflected in that $240 of the 2020 spent amount. And as you can see in 2018, 2019, it's $1,100,
Yeah.
which isn't really a whole lot when you think about it, when you figure in the spring cleanup, the fall cleanup, and then the weekly trimming and mowing and blowing and cleaning everything.
Mm-hmm.
So like I said, if it's something that the town highway crew could take on,
Mm-hmm.
then, you know, he'd be willing to give that up. But at some point in time, I think the Scribner trustees would be seeing an increase in that rate.
Okay.
So, and I kind of, I think any other discussion on that I should recuse myself from because of our relationship.
Sure.
But
Sure.
my relationship with Ray Mason and Mason Enterprise.
Sure. That's understandable. Thank you.
Yeah.
I think that like I said, I hope to be on the agenda Monday night with the BOS, and that would definitely be something I would ask we're going to have to work with the BOS on what kinds of expenses the town can begin to assume with the Scribner building. How fast, you know, do you want this trust to bleed out? You know, right now we've got about $50,000. You know, we got the money, but how long do you want it to last? Because it's not going to last forever, you know,
Right.
and I don't know how much money we'll have a week from now either.
And that is a known thing that
So
at
no.
some point in time, that lawn maintenance, that spring and fall cleanup, that hourly rate that is charged will be increased.
Yeah, I've made a note of that, so I can discuss that.
Okay.
We have furnace cleaning. Staples is the store, Staples, and the
Right.
postmaster. I didn't have anything yet spent for 2019. In 2019 that I saw, I didn't see anything yet spent in 2020. Maintenance other than lawn, I don't know what the 1704 did. I don't know about the 320. I know that we put in a new hot water tank in the library. That cost about $800. And then down here, the stuff that's down here below, I'll tell you right now, I think this is stuff that we can cut. The insurance. There is an insurance policy that's paid out in quarterly premiums of about $300. That is a secondary insurance policy on the building. I emailed off to you all the proof that Primex does indeed insure both the contents of the building and the building itself. That is the town insurance policy. The Scribners, many years ago, 10 plus years ago, got a secondary insurance policy with them as beneficiaries, with the Scribners as beneficiaries. But the Scribners don't own the building. I'm assuming it would pay out. I don't know. You know, they don't own the building. They're not in a mortgage situation where someday they would own the building. But this would save us over $1,000 a year if we cut that policy. If the building and its contents are insured by Primex, I've checked through Charlie, I got the documentation, I sent it off to you all, show it's insured. If we cancel that policy, that will save us $1,100 a year. The second thing that I have another motion that I want to make now, and that is that the Scribner's trustees rescind the stipend and do not collect a stipend for any reason forever.
I'll second that. I'll second that.
We have any discussion on this? Then all in favor say aye.
Aye.
Aye, Lisa Rollins.
Okay.
Cloud.
Aye, Amanda Loud. So we're all done. No nays. It's unanimous. That just saved us. Last year it was $1,000. Before that was $1,250, as I didn't take a stipend last year. The last thing then I know about it because I found it in the checkbook. I do not know if I have a key to it yet or the signatory card to get in it. I've talked to Jill White at Meredith Village Savings Bank today at great length about getting into it. There does appear to be a lockbox or a safety deposit box at Meredith Village Savings Bank. The Scribner Trust is paying for it and has paid the annual fee for many, many, many years. I don't know what's in it. I can't imagine what's in it. I don't know. I do know that I want to get my eyeballs on that thing.
Darn, I've been looking at this for a week now saying, what's in this lockbox? I was hoping you would know.
I don't know. I'm dying to find out. But anyway, I would like to look at it and find out what's in there and then close it.
Well, we should find out what's in it first.
Oh, absolutely. I said I want to go in there, and in the process of being able to get in there and see it is a process of getting signatory authority from, BOS recording that I'm a trustee of the trust funds and having a new trustee of the trust funds meeting and saying that I have authority to go into the lockbox and getting everybody voting in minutes and signed on. And then I can go in and Jill can get me in there and let me see it. So anyway, so looking
I'm sorry. I know this would probably cost some money, but I'm curious to know, when you were talking about lockboxes, it got me kind of thinking about it too, is there are many sets of keys out to the Scribner building.
Yeah.
And I'm wondering if it would be beneficial for us to have the locks changed on the building and then the people that need to have keys. I don't know if the former Scribner trustees have turned in their keys.
They have.
They have, but that doesn't mean that they don't have more. I'm not saying they do.
I think you're right in theory.
But everything's on camera in there, so inside.
Yeah, I think we're probably, I do know that as far as keys go, that we should have a set of keys at the town hall. There are no keys at the town hall. I know that we had the building inspector went through the Scribner building on Friday, and they used my keys to get in because there were no keys at town hall. So I'm looking forward to seeing that building report on the building, because as we look forward, kind of going, there's just so much to cover, kind of going all over the place. We do have a roof problem, or at least that was the understanding of the last Scribner board, that would probably cost about $5,000 to fix. It was part of the roof needed to be redone. I will tell you right now that I am very hesitant to be spending. I know that if you don't fix the roof, then you got an even bigger problem with what the leak causes. I understand that. But I do want to see what the building inspectors come up with as problems of the building and its integrity.
Yes.
As this thing depletes, as the trust depletes, I am very adamant, myself, my personal opinion, that this place does not become a park. We don't need another park in the town of Ashland. And once, according to Emma Scribner's will, once it hits 40,500, the building is to be torn down and turned into a park. And if we turn the thing into a park, then we have lost its integrity on the tax bill. You know, you can't, when you sell, if you don't have anything that you can sell to somebody else who'll pay property tax on it. Now you have a park.
Well, it's probably going to cost more than $40,000 to tear the building down and do all the
I agree with that.
necessary abatements and stuff too.
I agree. So as we move forward now with the trust and the expenses that the trust cannot support, keeping in mind, you know, that we work very closely with the Board of Selectmen who own the building to try to find some solutions, none of which we're going to come up with tonight, you know, or probably in the foreseeable, you know, future, but in the long term we will. So looking again at this, we've ended the stipends. As for the insurance, that's another major cost a year. How do you all feel about stopping the policy? The thing about this is it's paid in quarterly increments. My understanding is the next policy, this was paid last in March, and it'll be due again, another $300 or so will be due in June. So that decision needs to be made, you know, probably at this meeting, if we're going to discontinue the secondary insurance policy on the building.
Well, if we discontinue it and we haven't used all of it, it would be due in June, so.
Yeah,
I mean,
we wouldn't pay it.
We're halfway through May, right? So.
Right. We just wouldn't make the June payment, is my point.
You wouldn't make the June payment. Yeah.
I'd end up defaulting if you can't pay the bill anyway.
Exactly. I can't sign a check right now. You have to be out of my own account, you know, and get refunded.
Right. Yeah. So anything left over from, if there was any balance left, they would refund that anyway, and it probably wouldn't be a whole lot. What is it? It's about $300 and something, right?
About $300 a quarter. It's gone up in price. In 2019, it was $1,133 for the year. Yep. And the building is already insured by the town. The town owns it, and the building is insured, contents and building.
Yep. And the Scribner trustees don't pay for that. That comes from the tax money. Where does that money come from?
The one that the town, the policy that the town has on the building with Primex is coming from taxpayer dollars. This second insurance policy that have the Scribners as the beneficiaries. The town policy has the BOS, or the town, as the beneficiary. The Scribner has the Scribner trustees as the beneficiaries who don't own the building.
I don't know. How could they even be? How could they? I don't understand how they could be the beneficiaries of something they don't own.
I'm not sure. I did some research into this and talked to an insurance agent who said it would be like having a car, you know, and you don't own your car, you're still making payments on your car. And then I stopped and I thought, but unlike a car policy or something where you have a secondary holder on it because you don't own your car yet, you're still making payments. there's no mortgage on the Scribner building. So there's no possibility of the Scribners ever owning it, period.
Right.
So
And
I didn't understand that.
do we still have, because it says building and contents, and so do we still have library trustees on the air here with us? And can they talk to about the contents? Because the contents would include, I would assume, the books and everything, the library materials itself and the library furnishings. I'm assuming that's what that is talking about, but it also includes the artifacts. I guess I want to call them the artifacts, the historical significant items that are upstairs in the building, that there's stuff, Civil War things and Scribner items and stuff like that. So the contents that it's insured for it's very small print, 466,200, I think it says. And so is that what that is for? Is for all of that? Does that cover everything within the building?
The only thing I know, years ago when I asked Paul Branscombe if the insurance covered the contents of the building, he said yes. I don't know any detail, but I was always assured that the contents meant obviously everything we had in the library.
Yes.
I don't know anything other than that.
And this policy that the Scribners have for $200 or $1,100 or whatever it is, $200 and $300 every quarter.
Yeah.
That money there, is that just on the building and
On the building. No
On the
content.
building.
No
no
content.
contents? Okay.
Building.
Right.
Yes,
Because
Susan,
that-
you've been waving your hands. What's Susan?
The contents is the library. The library is a town-owned entity.
Yes.
Then the other point, as I understand how insurance works, is they never double pay for an event. If the building burned down or one of the trees fell on it or whatever else, Primex would cover whatever, after deductions and whatever else, would pay the town of Ashland, the owner of the property, for the damage. And somebody's filing a secondary claim on it would not get it.
Right.
Because they, number one, they don't own the damaged building, and number two, it's already been covered by another insurance company.
Yep. That's what I have heard as well. That is what I have heard as well. So I would like then, I guess, a vote. I move that we suspend the secondary insurance policy because the building is already insured by the town and we don't own it.
I'll make that motion.
Okay, I'll second.
Seconding? Oh, okay.
So all in favor?
Susan. Aye.
Susan McLeod, aye.
Aye, Amanda Loud, aye. Okay, so
So we're suspending the insurance, the
Yeah,
building
insurance
insurance,
policy. Yeah,
the Scribner,
the
the Scribner
Scribner.
policy.
Yes. Yeah.
I have another comment about what's on the screen in front of me. I know this is the best you could do, gleaning out of a checkbook and everything.
Yeah.
In the past, when I lived in a housing cooperative, we had spreadsheets that itemized maintenance and repair and capital improvement with its
Yes.
well, and every year you could look at and then formulate some kind of budget as to what you're dealing with
Yes.
in the upcoming year.
There have been no Scribner budgets. I have asked for that at every meeting, which you may or may not have heard on the videos. And the best I could ever get was at least what the balance was in the checkbook. So this is a start. This is a start of what I put together on what the money is spent on, so that
Like maintenance other.
Yeah.
So where would the hot water heater go? Is it a capital expense
There you go.
depending on what they spent? And then does it start to, what's the word?
Depreciate.
Depreciate. You have a depreciation schedule for everything that has been put in like that.
Yeah.
And
I think that's going to be a bit much, but yeah.
Yeah,
we're
but we
going
need a
forward.
little better than this.
Going forward from this point, I'd like us again. We've cut some spending. We've cut $3,000, or we'll conceivably cut $3,000. We cut the insurance, that's over $1,000. We cut the stipends, that's $1,000. And then if we move the money out of Wells Fargo and into Vanguard, we're going to cut close to $1,000 on fees. So there's $3,000 of the $9,000. So we've cut the budget 30%. That's pretty good. We need to, going forward, we're going to find more expenses. And as I said, beginning, we have apparently some roof work, which is going to need to be done. And by the time we meet next month, then we will have received the report from the building inspectors, which will be very helpful.
Right. Also the tree situation.
Yeah.
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 That
So
was a point of contention with the BOS too, about DPW automatically volunteering to do it. So that is part of the discussion as to some of the work that has to be done and where it will happen.
And again, this is kind of bringing me down to, as we go forward with this very primitive budget that I have presented, it will be a much richer version by December, because we will have gone through half a year and we'll have a better idea of our expenses. But again, it's about cutting our expenses and about going before BOS and trying to figure out what can and cannot be shared. And actually, that's the next thing on the agenda, is working with the BOS. We're going to need to go before the BOS, I think, as we all agree. And as Susan pointed out, we got tree, what expenses can we share? Can we get the town to take over, like the yard, the lawn maintenance of the building, and having something that I can, or any of us, we can talk to the BOS about what our expenses are and our intent to cut those expenses in order to increase the longevity of the Scribner Trust. It's got an end point. It's not going to be forever. Maybe we could get 5 years out of it. I don't know. I don't know what's going to happen between now and December. Could be gone in December. I think that's a probably not a huge possibility, but definitely a possibility. And, I gave it 18 to 36 months when I came on in June, and, dadgum, I may be wrong. It may not make it 18 months. But I think we can make it 36 months possibly. Anyway, I have to say, when I made that projection in June of 2019, I did not think a pandemic would take it down. I made that projection in 2019 based upon how it was invested, how it was spent,
Right.
and based upon my own gut feeling that the entire market was inflated. And I wasn't the only person thinking that. I thought it would topple more on like a 2008 scale. I was wrong. Topple more than that. But I don't know what the recovery period is going to look like. I can tell you right now that this is not going to recover. If you look, and I sent you an email of that chart that I held up at the graph that I held up at the town meeting and whatnot. It goes down and it comes up, but it never goes up where it was. Just comes down, then it goes down and it'll go back up, but it never goes back up where it was. And then it goes down. And now we are down at 89,000 from 96. And I'll tell you right now, it's not going to go back up to 96 because we are continually having to spend this money. This is something that is being spent on a monthly basis. This isn't something set aside for somebody's retirement in 30 years, and it will not go back up where it was because of that. Having said that, working with the BOS, I would like us to have representatives to the BOS who can and will speak on behalf of the Scribner Board. Every time I've gone before BOS in 2019 and 2020, and as I did at the meeting in February 1st, I preface everything I say by saying this is my own opinion, speaking as an individual. I want us all now to speak as a body of Scribners, coming before the town. And part of that I also wrote in legal questions for the BOS, and I attached that in an email. These are questions that let me get this up. These are questions that I put together a year ago when I went before the BOS and wanted answered. To my knowledge, I don't know if they were ever sent to legal. Some of these questions now no longer apply. The stipend, must the Scribner Trust pay for all the upkeep, and apparently no. Others can pay, the insurance policy, invest in the Scribner funds to the contrary to the Ashland Town investment policy. The answer to that is actually yes. The Ashland Town investment policy basically only governs CRF, capital reserve funds, which are held in money market accounts at Meredith Village Savings Bank. Trusts and other investments, the trustees can invest in using the prudent man rule, which means don't do anything stupid. So that for doesn't account is no longer.
But again, the RSAs, there's one specifically on investments that the trustees of the trust funds must follow. And
Yes.
the resolution that created the Scribners said that they had to follow the same exact guidelines.
Yes, and the trustees of the trust fund do have recorded with the Attorney General's office, because I got it from them. They do have an investment policy which has been approved, and it is a good investment policy. There's nothing wrong with it. I have a copy of it. So we don't have to follow the town. The town investment policy is much narrower than the trustee investment policy. Does the Ashland Board of BOS, does the BOS have the authority to call Scribner trustees to report to them? That had to do because I was the only one that would go.
But they do have the right.
They do have the right, but my question was to legal, must the Scribners respond?
Again, the resolution said they had to.
Yes.
And they were created.
Kind of a moot point now. So look at number 7. Do the Scribner trustees have the authority to close the building? So this is looking toward kind of this end. We hit 40,005. What happens if we hit 40,005 December 1st? I don't know. We possibly could. Who knows? I think we're going to hit 40,005, a year from now. Could be. Could be 18 months from now. It's going to come soon, especially if the BOS does not assume any of the expenses in maintaining this building. If we have to spend $5,000 on the roof because we've got a bad leak, $5,000, that's 10% of the $50,000 we have left to spend. 10% went on the roof. Next. Now we still got to pay the heat. Now we still got to pay the phone bill. Now we still got to pay the fire. So the money can go really quick. That's what I have said all along, is that depletion is an extremely steep calculus and it will go fast. So look at question number 7. Do the Scribner trustees have the authority to close the building if they deem there's not enough income from the trust to keep the building open to the town? Now, this is a little bit of a problem because we have a library in it. I don't know if you can padlock a library. But as we get closer to 40,475.70, my opinion is, I think we need a legal answer to these questions, because we're going to get to a point where this could be something. If I had it my way right now, and there wasn't a library in the building, man, I'd shut that thing down like yesterday. I wouldn't heat it. I'd drain the pipes. I'm not spending any money on oil. And then I figure out, what are we going to do? But I can't do that because we got a library in the building. So I want to know if the Scribners can close it periodically or for a limited amount of time. Do we have the authority as Scribners to close down the building? I'm not saying we should. I just want to know what our options are. And I'd like to have a legal answer. Do we have to give notice of this to the tenants, to the guests, to the library? I don't know. I'm not saying I'm going to do it. I just want to know if it's a possibility. How long can it be closed to the public before the building's considered no longer to be used for public use and must be torn down according to the Scribner will? Another question I'd like to have answered by the BOS is, does the Scribner Board of Trustees cease to exist? Do we as a board cease to exist when the income of the trust is depleted? In other words, the balance is 40,475.70. Do we cease to exist? I don't know.
Well, there's still a balance to supposedly manage, and
Well,
I guess the next legal step would be to vacate the trust and therefore the stipulations of the will, so that you wouldn't necessarily have to tear the building down and make it a park.
I agree with you. But I think it needs to go to legal. In 9, it says, should the trust deplete to 40,475.70, what time frame do the trustees have to vacate the building and turn it into a park? Must the trustees give notice to the tenants in the building? How much notice must we give? Who will have the authority to tear down the building and transform the area into a park? The Scribner trustees or the BOS? To whom do any remaining funds of the principal go after the area has become a park? Do any remaining funds go into a park trust to manage the park? If so, are the Scribner trustees then responsible for managing the Scribner Park Trust? Or do the funds combine with the Memorial Park Fund and then maintain both parks? Who will have the authority to decide where any remaining funds will go after the Scribner building is torn down and the property is turned into a park? The trustees or the BOS? Now this, I believe, and what I'm asking tonight from the Scribner board is that questions 7, 8, and 9 be resubmitted to the BOS, along with any other questions that we might have. Be resubmitted to the BOS to go, and we request as a Scribner board that they get answered by legal, so we know what some of our options are as we near the end. I think having these things answered when we're looking at 45,000 is too late.
Oh, I would agree that they should have been submitted originally, and they should
I
be.
did. I don't, but I had to submit them as an individual. I could not, I was not allowed to speak. The Scribner board did not vote to allow me to speak on behalf of the board. And I was one individual. And so now what I am asking from you others, and it's getting late, and we're going to end them, this is the last thing on the agenda, is that we authorize, I guess we authorize one or two of us to speak on behalf of the Scribner board and submit these, at least questions 7, 8, 9. I don't think the others really apply to anymore. And submit questions 7, 8, and 9 again to the Board of Selectmen from the Scribner board and get answers.
Right.
And how would we do that? Like in a letter form?
I can do it on the 18th at the BOS meeting and hand it to them.
Well,
Amanda, I would document it as a letter.
Okay, I mean, I'll have it written out. Okay, yeah.
Paper trail.
Yeah, absolutely. No, I'll have it. I did it last time. Last time, Kathleen, I had them all written out and I just submitted them as an individual. I think I might have done that in August of 2019. I never heard back on any of them.
My only thought is that this is a probate issue.
Mm-hmm.
That these questions probably would necessitate a trip to the probate court to ask to be released from the terms of Emma's will. And you would put forward, we already have a park. We don't need another park. We would like to keep the building as the library. Could the town absorb the trust? Could the trust be, I don't know what the legal term would be, but I believe all of this would have to go through probate.
Mm-hmm.
I kind of agree with what Kathleen's saying. And then also, then what would become with the balance of the money and the Scribner trustees? Because at that point, it's already a town-owned building. So at that point, then it's the town-owned building with the town library in it.
Yeah,
I guess is what I'm saying.
If the trust is out of funds, I think it would have to be a whole legal thing of transfer, not of power, but authority. That you would have to vacate ask to be vacated, released from the specific terms of her will, which was done already when the court decided a community library fits the definition of a community center. Therefore, going forward, the Scribner building is the Scribner Library. This whole thing about guests and tenants, I never understood where that verbiage came from. It was the town accepted the building with stipulations. One of the stipulations was that we have two appointed at-large Scribner trustees who
But
would
you can-
join the trustees of the trust fund. What?
You could erase the Scribners by another warrant article because they were created by a vote of the legislative body to begin with.
Which we could. So that would put to rest. We don't need, for heaven's sakes, 7 trustees to manage this building, because we already have the library trustees. That, the request would be that this would be under the purview of the town of Ashland. The Board of Selectmen have the authority to manage town property. And the money pot, I don't know about. But if we could have a dialogue, and I'm quite assured now that we can have a dialogue going forward with everybody, the 3 library trustees, the Scribner trustees, and the trustees of the trust fund. I can't speak for the rest of the Board of Selectmen, but I am more than happy and looking forward to sitting down and having a honest dialogue and hammering these out, all these issues out. And I think we have people on board now who feel the same way, and we need to move forward and leave some of this other rancor behind.
Well, I have a very basic question here. When it was accepted and established, was it established as revocable or irrevocable?
Neither one. We have no trust document. We have no trust document supporting this. All we have supporting this is Emma Scribner's will and the warrant article from the town meeting in 1936.
But if you want to get technical, if it wasn't ever established as
a trust,
irrevocable, then you can approach it that you can revoke it.
Well, so look here at what I've shared with you on the screen. I wrote in number 10. Can the town of Ashland, this is a question to submit to the BOS from the Scribner board to go to legal. Can the town of Ashland be released from the terms of Emma Scribner's will? How do we go about this? And would this place the Scribner building under the purview of the town of Ashland?
Yeah, well, part of that, I know part of it is a probate and the will itself, but there is also that other RSA that covers when an endowment reaches the end of its life, that you can acknowledge that it is no longer a functioning endowment or trust. It's non-functioning. So that at that point you can sort of, kill it.
Well, I think what I want to do, my reasoning for sending these questions to legal is I want to know, how do we kill it? I want to know what are our legal options on this, as many as possible. You is it possible? I'm not, canvassing for us to shut down the building, but I want to know what our options are as we come to the end of this. And one option is to shut down the building. If it depletes, do we still exist? How can we get out of Emma Scribner's will, and how do we do that? Well, I think we go through the probate courts and say, yeah, I want to know, how do we do that? I want us to
you have to petition. You have to petition probate to to revisit the will and ask for judgment. Something to that type of language.
Yeah, I guess what I'm asking for is I want some really clear guidelines.
You have to ask very specific questions, because especially with our legal, you will not get the detailed information you want unless you spell out that's what you want. So maybe we should all have a look at the wording of this and be able to.
And would it be the town of Ashland, or would it be the Scribner trustees being released from the terms of the will?
Town of Ashland. They're the ones that
No. The Scribners. The Scribners. the Scribners would no longer exist.
Right, that's because,
But that's only one part of it, because
That's only one part of it,
trust
yeah.
funds are also the
Yeah.
ex officios for handling this.
Yeah.
And it was the town that accepted the property and the
The
endowment
money.
in the name of the town, and then just
Right.
named the trustees to be the managers. But in the end, it's the town that has to get out from under it.
Right.
okay, all right.
It was a wonderful thing back in 1936. Nobody ever thinks about what's going to happen years later.
I know, even
That's
with the
correct.
park, I mean, 30 years after she's gone, they created,
Yeah.
created a park in town. So,
Things
So-
change, and this is why you have to revisit these type of documents. You can't wait 50, 60 years because
Right.
so many things change. And by the time you get to maybe the end date, it's like, it's like, what do we do now? Because there's no plan in place. It's like a transition plan type of thing.
Right.
That's
That's what I'm looking for.
Yeah.
So like you said, we may need to have things be more specific. I think my question 7 is pretty specific, and I think 8 is pretty specific. 9 is pretty specific.
the other thing, oh, I'm sorry, Amanda, the other thing is you probably can call the Department of the Attorney General, the Trust Division, and they
Okay.
might be able to answer these questions in very basic terms. So you'll have that information, and anything very
Okay.
specific, you can then submit.
And
to
that
the
would be
town.
that Tom Donovan that sent the letter?
Yeah.
But he's just the Attorney General. There is a whole Trust Division.
no,
Yeah,
he's
the-
taking over
He's
from,
the director of the charitable trust.
Yeah.
he took over
Tom
from
Donovan.
Terry Knowles.
Yeah, he took
And
over.
Terry is part-time advisor. She's the encyclopedia of how to answer these things, but
Okay.
um,
So I'll tell you what I'll do though. I'm hearing that on behalf of the Scribner board, I will contact then the DOJ division, Trust Division,
Okay,
the Attorney General's office, the Attorney General's office,
The Division of Charitable Trust.
Yeah.
Division of Charitable Trust.
Is that correct, Susan?
yes.
And I will talk to them, probably submit this stuff by email. My guess is everybody's working from home and all that kind of stuff. And I will talk to them and come back at our next meeting with questions 7, 8, 9, and 10 answered to some degree or refined, or at least giving us a direction on where that is going.
Yeah, they'll
Right.
tell you, they won't hesitate to tell you to go to your town council if it's
Okay.
something they aren't comfortable answering, or if it's too specific to a specific case. They'll give you a general
Okay,
overview.
yeah,
And sometimes that's a good base to have.
okay. And that would refine these so that we still may have 1 or 2 things that we do need to submit to legal, but not all of them.
Mhm.
Very good. How do you feel about that, Susan and Lisa? Does that sound good to you?
yes, and are we
Okay.
still, so you're not going to submit the stuff to the
Yeah.
Board of Selectmen at this point?
Not at this point.
I
want
would suggest no, not to. That's my
Okay.
opinion.
I will
The-
talk it over with the Division of Charitable Trusts, and who may be able to answer several of these questions for me, or at least refine them so that my questions are more direct, more specific, and more pointed to go before BOS to be submitted to legal.
Yeah, that I think they would, if they had questions about what you're trying to get, what kind of answers you're trying to get, that dialogue with CTU will help you formulate what we need to ask our lawyer as to
Right. Very
getting
good.
the answers we need.
So I'll have that then for us at the next meeting. So right now, going back to what I had on the agenda, can we vote to have, some of us be able to speak on behalf of the Scribner board?
You're the
elected as
chairman.
representatives? I'm sorry?
You're the chairman.
Okay, so I guess I can speak on behalf of the Scribner board when I speak for BOS and not as Amanda Loud.
I'll let you do that.
Okay,
Yep.
are you agreeable?
And if one of us also wants to be at the
Oh,
same
sure.
meeting and be able to
Right.
be backup, as long as it's just one of us at this point, because we can't have a quorum, because then we'd be
having a
representing
meeting.
a,
That would be bad.
Yeah.
Yes. But definitely it would be fine to have another one. But I think that going forward, we are now speaking on behalf of the Scribner board, because we're going to need to get some answers to this, you know, and direction. And we're going to need to work very closely. I think we're all agreed on that with the Board of Selectmen on who's going to be able to cover what costs as we cut costs. And as we try to bleed out the trust as slowly as possible. It will bleed out. It will not last. We can't make it.
The library trustees have to be brought into the dialogue too.
Absolutely. Yeah, absolutely.
Because they've been kind of left on the fringes for many, many years, and they need to express how they vision going forward with the building too.
Can I make one comment, Amanda?
Yes.
Back in the fall, the library trustees wrote a letter to the select board encouraging that there be a dialogue between the select board, the Scribner trustees, and the library trustees as to the future of the building and the trust.
Yeah.
Yes.
about time.
So we did, that was back in the fall.
Yeah.
I think that there's been no problem with me, but there was, again, other people weren't wanting to talk so much. So I think we're entering a different era.
Martin is correct, but we needed all players to be involved.
You need all the players to be involved, and I agree.
Because
Amanda, you're going to be the representative to the BOS?
Sure.
Okay. But the rest of us, we can listen in on these meetings and
Sure.
stuff. Will we be given?
Yeah, but only 2 of us at a time, as Susan pointed out, can talk. Otherwise, it's going to be a meeting.
Yeah, I don't need to talk. I would just like to hear what's going on.
You're the public, absolutely.
Amanda, one way around that is if the entire or a quorum of the Scribner trustees are going to be at a select board meeting for a presentation or discussion, just post that you're going to be meeting with the select board.
Mm-hmm.
That's
Very
what
good.
we've done.
Very good. I will do that then.
Yeah.
I mean, I think we did that with the Conservation Commission a few times.
Yes.
Okay.
That we posted that was our meeting.
Okay.
Signified that we were there as a quorum to present.
Yeah.
Okay. Okay. So speaking of meetings, our next meeting then, I would like our next meeting to be, traditionally the Scribners have met the first Monday of the month. That is the same night as BOS meeting. And that's why I had this on the 11th. I don't want us to be opposite the BOS.
Right.
So our next meeting then would be on June 8th, which would be the second Monday of June. How does that sound to everybody?
Well, I was.
Unless you want something sooner.
Well,
That's where I was thinking was
Okay.
maybe something sooner with everything that's happened, in light of everything that's happened with other board members resigning from different
Yes.
things and
but the
everything
thing
that's
is,
going on.
in order to get anything moving forward, the first thing, once because as I said before, I have no, Tom did not fully process. My understanding is that my signatory cards were not fully processed anywhere. And so I can't sign on anything. So we have no trustees of the trust funds. I have just me, and I can't sign anything. And that will take time. The BOS can appoint new trustees, and then 48 hours later, we can have a meeting. And then, so right now we can meet, but there won't be ability to do anything until probably about June 8th, because I'm going to have to get a trustees of the trust fund established and get their all of our signatory authority on things. And then when we meet, we can actually do something.
Well, treat it like a work session that you'll sit down and just
Okay.
Share your ideas and throw things around.
Okay.
It's only for half an hour, 45 minutes. The 3 of you have to get used to working together.
I agree. I agree.
And I always feel it's better to have maybe too many meetings than not enough.
I agree. I agree. It sounds good. And it would be good to have the library trustees come as well, because that could be, again, to begin the dialogue on where our needs are and what things are looking at. There's a chance that we would have the report from the
Good. Building
building
inspector.
inspector, which could
Yep.
be really very helpful. So I
So
agree
you're
with
looking
that.
at Monday, June 8th, is that what you said?
Well, that would be the next, maybe the next official meeting. That would be by the June 8th. I would put that on your calendar, because by then, fingers crossed, we'll have a trustee of the trust fund board going, and we will have signatory authority on at least most everything, by us, so we can actually do something.
And how does the time of 5:30, does that work for the other members, for you and Susan and
for me.
whoever else might be joining us?
Works for me.
It certainly
Okay.
works right now, yeah.
Okay,
Yeah,
so
okay.
let's put us down for then, and then to have what Kathleen was calling a work session, particularly with the library trustees present as well. That would be very helpful. If we met, see, the problem is that 2 weeks from now, Monday the 25th, is Memorial Day. Now,
Oh.
it doesn't mean anything to me. I don't know if it means
It
anything.
means nothing to me either. It's another work day for me.
Yeah.
Another day, another dollar.
Yeah.
Gotta keep working.
If
If you're zooming, you're not occupying the building or worrying about any of that.
right.
I would suggest if it works for you guys, make it happen.
Okay. So are we all good then? 5:30? We can do 5:30 again on Monday the 25th.
Monday,
Sure.
May 25th.
And I would like that to be a Scribner kind of / library trustees. I would like to invite the library trustees to be there, to give some input. Like I said, hopefully we'll have some more information, and we can start to begin to work together on, what's going on.
And would you like me to email Charlie or whoever is in charge of setting up these Zoom meetings?
Well, yeah, I could do it too. I have the Zoom information to use the town account now. I have
Okay, well, that's great then.
So I'll handle
All right,
handle that part. But we definitely need
Perfect.
you to handle the minutes.
Yep.
And the
And I
post.
had a question about that. I wanted to know, I know you said they had to be submitted within 5 business days, and I just wasn't sure who I submit those to at the town office. Who would I send those to? Do I send those to Mardine?
Those, the primary person to get the minutes to is Patsy, who is the
Okay.
town clerk. She is the official repository for minutes. But
Okay.
also send them to me direct, and you can do it by email so that I can put them up on the website.
Yep.
I
Okay.
will begin to work on probably a separate page for the Scribner trustees and the town trustees. It will take a little while. I may be asking you all some questions to what to put on it. Obviously, I will have to go through Charlie to make sure everything is.
It would be nice to have that stuff added and included, Marty.
Yes.
Yeah.
Yeah. So minutes go to Patsy and to me.
Can you put
Okay.
recordings of our meetings up on our portion of the website as well?
I will have to figure that out. It
Okay.
will,
Be formatted.
yeah,
I need for it.
it'll take some work. But what I will need probably would be best if I can get a file of a
Okay.
recording, and then I can start figuring it out.
Yeah. You could just even post a link. I've been having them on my YouTube
Mhm.
channel, and if you just had the link, people could hit that and go there. Be fine with me.
Yeah.
Okay. And that would be very easy. You're just posting a link, and they click on it and go.
Okay.
Okay.
Great.
Well, ladies and gentlemen, thank you so much for coming. I think we've covered everything that I had on my agenda. Any questions?
No, I'm just hoping the timeline is that next Monday, 2 people are appointed to become trustees, and you can work on getting all of that in order. And
Yes.
so our work session, if they are included as well, we might be able to formulate something if around these questions and everything to really be prepared for the next selectmen's meeting.
Yeah, yeah, yeah. I still plan to be on the agenda on the next Monday, on the 18th, because I would like to, do we have any, we have Mardine is still here, library trustees. Just because of things that I have discovered, no malfeasance, and I want to make that extremely clear, but things that I have discovered as a trustee of the trust fund of different funds that exist and that have not been dispersed properly or have not been, yeah, they're not invested so that the beneficiaries can benefit. There we go. So anyway, I've been talking to the BOS about that just because this is public information. Everybody needs to know what the state is of the town funds and where they are and what's going on. But there's nothing I can do because, like I said, no one has any authority to sign anything right now. So we can't sign off on any CRFs for police cars or fire trucks or school, elementary school
Thompson
stuff.
Street, to pay for Thompson Street.
Nothing. I can't sign anything. I have no authority to sign anything. I can't even write a check to pay a bill in the Scribner building because nothing was processed. So anyway, but it's not going to be that way forever.
That's right.
Anyway, very good. So I will see everyone again then on the 25th of May at 5:30. And in the meantime, I will try to get some stuff answered from the Division of Charitable Trusts. I will talk to the BOS on Monday night. I will add about the taking over the lawn maintenance of the building as a cost-cutting measure to begin to put the bee in their bonnet about sharing expenses and to begin that dialogue. And I think that was all that. Oh, and about the put the idea forward about the oil, buying the oil and propane, and getting a town rate. You know, if we put everything out to bid, so that everybody's buying from the same one, what that would be like. Okay. Anything else?
Yeah, I was just thinking. So about the lawn maintenance, that's going to be coming right up around the corner, and so if you don't have the town doing it, and we can't do the, I don't know when the lawn mowing is going to start, is what I'm saying.
Right, I agree.
And
yeah,
so, yeah.
And it is billed. Mason does bill Scribner building monthly, so that, you know, as I go before the BOS on the 18th, I will certainly tell them, you know, we are in the season for this to happen, you know, and can this be assumed? And, you know, the problem is we do have the money to pay for it. We've got $50,000.
You might have to transition into it.
We're going to transition into it. We're going to begin that discussion, you know, how that's going to work.
Yeah, I just didn't want it to become a hayfield out there or something.
Right. That's not going to happen. Mason, my understanding is, you know, Mason has been doing this. No one has stopped. No one has, you know, called him and said, don't do it. You know, we're not doing that yet. But
well, I haven't talked to him yet today, so.
Well, tell him that we're not planning on stopping it right now. You know, he needs to keep doing it. But what we do need to begin to transition away from that is cost saving. It's really a decision that, you know, the town, the BOS, and that we Scribners make together on how slowly can we bleed this out. You know, this will not last. This is all the money we have. You know, how long will it last? I don't know. If you stuck it away right now in a mattress and you pulled it all out, $50,000, you know, we could probably get 6 years out of it.
Yep.
I think it's very realistic. Less if we're putting on some of the roof. Now we're down to 5, you know, and something else breaks and we got to fix whatever the building inspectors found. Well, now we're down to 3 years, you know, and that's if it's in a mattress. It's not, you know, going down with the market. Could go up in the market. We could get another 10 years.
Yeah.
But you know what? It's not going to be forever. There is a limit. I'm saying it could go up. We could get another 10. You know how fast 10 will go? So we've got to start making plans and figure out what we're going to do in its absence and what our possibilities are when it does hit 40,000, 475.70, because it will hit that. I just don't know how soon it will hit that. It could conceivably hit it before Christmas. I don't know.
I think you hit the nail on the head. Plan.
Plan. We have to plan for this.
As far as I know, there has never been a plan that anybody could access. It needs to be day to day, week to week, month to month, however you want to look at it. You need to have a plan on how to transition going forward, and what will happen when the end comes.
The thing about the Scribner thing are two things. The first is that the scary part, the point when I was doing all this research, the point where I like wet my pants was when it was 180,000. That's when I went, oh crap, this isn't gonna last. And that's because if you do the math, you need 300,000 in order to pull 9,000 a year and not deplete it. 300,000 is what you need. Because 9,000 on 300,000 is 3%. And you get that magic 3 to 4% number. But see, when the thing was worth 180,000, nobody would have believed me that the sky is falling, because that was the most it was ever worth that I could document. So now we're beyond crisis. This is catastrophe at 85,000. This is awful. Now, the second thing about the Scribner Trust is that the current pandemic, unfortunately, provides an excellent example of what is going on with the trust. The mathematical formula for disease spread and for investment is almost identical. It is slightly different, but for the sake of argument, it's the same thing. There are some differences, but they are extremely minor. So the math that Fauci and everybody's doing in DC is basically the same math that the economists are doing. Same formula for the most part. When I heard that there were 6 people sick in a nursing home in Seattle back in March, I went to the grocery store because I knew it was going to get here fast, because I knew the math behind it. Now, if you take money, or if you look at go back to the pandemic curve, if you look at the news and you look at back what things were like in February, March, it was right here. It was going like this. And then all of a sudden it hit that sweet spot and it just went right up. That's what happens with invested income. It stays right here. And you get to a certain amount, you get a critical mass, you get a corpus, and it'll just shoot right up. The rich get richer. The more money you have, the more money you make. And you hit that critical moment and everything just goes. The problem with the Scribner Trust, it never hit the critical moment. The critical moment for Scribner Trust was $300,000. It never got there. So we have always been at a point of depletion. 180 was a crisis, but no one would have believed me that it was a crisis. Now we're at catastrophe. And there's still people that don't believe me that it's catastrophe because they look and they still see $85,000 or $89,000 there. Yeah, no.
It's not the real number.
It's go. It's not a real number. It's not a real number. It's not a solid number. And just as the rate of growth goes like this, the rate of depletion goes like this. It's a very sharp calculus. You come down, you come down, you come down, you hit a critical point, which has to do with its investments, its fees, and its spending, and it goes straight. I don't know what that critical point is. My guess is it's going to be somewhere in the 50s, 58,000 or something, and it'll disappear in a matter of weeks. That's my guess. I don't know. I don't know. But I'm telling you, I know the math behind it, and it's very scary. Anyway, on that thought, y'all have a nice evening.
Thank you for everything you've done and put together for us so far, too.
I'm sorry?
I said thank you for everything you've done and put together for us, and
you're welcome.
It's very important information.
Well, thank you. I'm not an expert in this. I know just enough to be a little dangerous, and I'm just trying to the best with what I know, but I appreciate that. Thank you very much. So I will see you again on the 25th of May and hopefully have some questions answered.
Okay.
Thank you, everyone. This is great.
Thank you.
I didn't think I'd
Thanks.
ever see this.
I agree.
Let's
I
move forward in a positive manner.
Yes.
Night, everyone.
Good night.
Right.